For something to be considered ultimate, it needs to be the best achievable or imaginable of its kind. And while I can't just willy-nilly make outrageous claims, what I can say is that if I had these 8 tips when I started trading, it would have been my ultimate guide to stock trading. So if you're thinking about trading stocks and you want to make sure you have a great start, this one's for you. Tip number 1, plan your trade and trade your plan. What this means is before you buy a stock, you need to know where you would sell it. And there are 2 sell points that you need to figure out. The sell point you would have for profit if the stock goes in your favor, and the sell point for an expense if the stock goes against you. By knowing these exits before you enter the trade, you will avoid a lot of emotional pitfalls and become a more disciplined trader. Stock trading is 80% mental and only 20% skill set. And having a plan in place before you trade can give you a stronger mindset for trading. Because then, when the emotions run high and you're in the middle of a trade, you don't have to make decisions based on what you think might happen. Instead, you just stick to your plan. That's ultimate tip number 1. Plan your trade and trade your plan. If you want a more comprehensive trading plan, keep in mind TRADEway offers some incredible trading educational packages. Now that's tip number 1. Plan your trade and trade your plan. Ultimate tip number 2, know, accept, and manage the risks. In other words, be aware of what you are risking in a trade. Make sure it's an acceptable risk. Then work to manage that risk. There's a saying in stock trading, and it goes like this: the money is in the management. Most people want to buy a stock and then forget about it. That's why they hire investment firms to manage their trades for them. But why do you think so many investment firms exist? It's because they know that managing your investments gives them an opportunity to create wealth. And that's not a bad thing, not at all. In fact, the Bible even indicates that if we don't have the skill sets to manage the risks on our own, then at the very least, we should give our money to the exchangers. But if you can know, accept, and manage the risks for yourself, there is great potential for gain in stock trading. So the next time you place a trade, recognize that you are taking risks with the amount of money that you put into the trade. Decide how much of that you're willing to lose and accept that as your acceptable amount of risk. And then limit yourself to that amount using something called a stop loss. A stop loss is a free tool found on most trading platforms that tells the computer, get me out of this stock if it goes the direction I wasn't expecting it to go. So remember in tip 1 how we talked about our predetermined exit points? This stop loss would be one of your predetermined exit points, and it takes the emotions out of the trading because it does it for you. So if the trade goes against you, you're automatically stopped out with an acceptable loss. Luke 14:28 says, "For who among you intending to build a tower sitteth not down first and counteth the cost, whether he hath sufficient to build it?" Knowing your risk is about knowing what your trade should cost you. If you'd like some help learning to do your own advanced trade management, give us a call, and if you want someone to do the trading for you, of course, we can help you with that too. So that's ultimate tip number 2, know, accept, and manage the risks. Ultimate tip number 3, if you want to grow your investments, look for growth stocks. Seems like a no-brainer, but most people don't even know what a growth stock is. You might think if the stock price is increasing, then it's a growth stock, right? But that's not always the case. Here's how you figure out if a stock is a growth stock. You have to look at its income statement and find the earnings per share numbers. And these income statements are available for free on websites like Yahoo Finance or Google Finance. So check the income statement, look for something called EPS or earnings per share. And if earnings per share is increasing quarter by quarter, then you may have found a growth stock. Chances are this stock will be worth more later than it is now. You say, well, why is that? The reason is when a company increases its earnings, more people want to own that company. If more people want that stock, the price is probably going to rise. Find stocks with growing earnings per share to increase your chances of getting into a profitable trade. So that's ultimate tip number 3. Here's ultimate tip number 4. Trade with the trend. You want to make sure that the stock you are trading has a price pattern, which means you can see it literally making a repeatable, reliable pattern on a chart. If you can see a predictable, repeatable, reliable pattern, we call this a trend. And what's great about trends is that they help you see when the price of the stock is near its lows and when it's nearing its highs. Ever heard buy low, sell high? Finding price trends is the secret sauce to doing that. Okay, that's tip number 4, trade with the trend. Ultimate tip number 5, sync with the market. If you buy a stock, you don't want the stock market to crash. So use this tip to check on the market before you buy your stock. The Standard & Poor's 500, otherwise known as the S&P 500, is a group of 500 industry-leading stocks. These stocks are tracked to get an idea of what the market leaders are doing. Whatever the leading stocks do, the others often follow. So before you trade your stock, try to identify a trend in the S&P 500. You can do this by looking at the S&P on a price chart. And guess what? It makes trends too, just like a stock. Make sure the S&P is in one of its upward moves before you buy your stock. This will help you synchronize your trading with the market and give you the potential to increase your profits. So that's ultimate tip number 5, sync with the market. Ultimate tip number 6, cut losers quickly and sell winners slowly. Once you're in your trades, keep as close a watch on them as your lifestyle will allow. Your lifestyle will dictate your trading style, and that's okay. But you have to be intentional to make it work. If you're a busy person, use automatic sell triggers like limit orders and stop losses so that the computer can do the work for you. If you're not sure how to do that, get into one of our training programs and we'll show you how. If you're not quite as busy, try to keep a close watch on your trades throughout the day. Don't let it consume you, but have it up where you can glance at it every once in a while. If you see a trade going against you, be prepared to sell it quickly and protect your capital. On the flip side, if the trade is moving in your favor, be patient. Let it ride a little bit. Let it run on up to your predetermined exit, like we talked about in tip number 1. If you can learn to win big and lose small, you'll be in a better position to make a profit. So here's ultimate tip number 7, control your position size. Here's a trap that many novice traders fall into. They increase the number of shares they purchase or use more money with each profitable trade. There is a time to do this, but it's not when you're trying to become profitable. The problem with this is that the larger trade sizes have the potential to wipe out all of the profits from your previous trades. To avoid this trap, stick to a consistent position size. Buy the same number of shares or use the same amount of money for a while until you see a good level of consistency in your trading. Then, when it's appropriate, increase your position size and keep it at your new size until you see proficiency at a higher level. So that's tip number 7, control your position size. Here's the last tip, ultimate tip number 8, keep a long-term perspective. Don't let yourself live and die on each trade. You're going to have some trades, maybe even a lot of trades, go against you. Focus on keeping your losses small, and remember, stock trading is not a get-rich-quick scheme. But if done right, you'll have the potential to get rich quicker. So don't lose sight of the fact that you're reaching for your biggest goals. But the best way to do that is taking small steps. Make sure those steps are following this ultimate guide to stock trading. And you just might find yourself at the finish line sooner rather than later. There you have it, 8 ultimate guide tips to stock trading. Number 1, plan your trade and trade your plan. Number 2, know, accept, and manage risk. Number 3, look for growth stocks. Number 4, trade the trend. Number 5, sync with the market. Number 6, cut losers quickly, sell winners slowly. Number 7, control your position size. And number 8, keep a long-term perspective. That's it for today. If you enjoyed this video and you want to learn more, check out the links in the description below. We'll see you next time, and then we'll see you in the market.